heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up this hour, Paramount. It officially agrees to a deal with Skydance, but shares whipsaw amid one of the industry's most dramatic acquisitions. We have details of the complex transaction.
An all change in Europe. We assess the impact from elections in the UK and France on the technology sector.
An AI startup, Heavier, raises $130 million from Andreessen and others. A conversation with the CEO as enterprises search for AI agents. But first, let's check in on these markets. And there's some volatility in the direction of travel of the benchmarks. While we're seeing ongoing political volatility in the US, France, we get a shock reaction in terms of the national rally coming third, way off that first originally predicted. The Nasdaq holding on to gains, but only just, led by the chip stocks. I know you'll take us through it, Ed. The CAC 40 in France had been higher in midday's trading. We're now falling back as we head towards the close, as people really trying to get a grip on what it means for French policy-making. Gridlock on everyone's watchword. Pound, look, after its political clarity that we got at the end of last week, the pound remains the best performer from a G10 perspective. The dollar is a little lower. We get CPI. We get, of course, chair of the Fed, Jay Powell, Tuesday, Wednesday. Move on to see what that means for the world of Bitcoin, because actually it's not so much the fundamentals of what's happening with the US and macro policy. It's more about what's happening with Mt. Gox, with supply, with perhaps the German state selling off some of its holdings in Bitcoin. We're off by 1.8%, 56,000, all about some of those daily moving averages and where the technicals point us. Ed, what are you watching on the micro?
Just four quick movers, because there's a lot to get into the show. Lucid bringing up the rear with quarterly EV deliveries. 2,100 produced, 2,400 or just shy of delivered to customers. Clearly, that's boosting the stock. They're still low volume, but that was a record for the company. Then I'm looking at Tesla, analogous, but there was that great story on the terminal in the last 24 hours about if you were a hedge fund that was short Tesla ahead of last week's quarterly deliveries for them, then you got burned because of the big run-up in that stock that we've had following quarterly deliveries. Then just two names, Intel and Nvidia. Intel was 6% higher, on track for its biggest jump since April. I don't see any news out there, but it's on a pretty decent run right now and recovering, and Nvidia's caught up as part of that. Probably our top story is Paramount. So Paramount shares lower. We get a combination, finally, with Skydance. It's a complicated deal, right, Caro? The terms are complicated. The players are complicated. We've been waiting a long time, down 2% off session lows. Let's get into it.
Yeah, because people clearly questioning this deal if the stock is still well below some of the price points. Let's get to it. Bloomberg's Lucas Shaw. Busy this weekend, Lucas. What does the deal spell out?
Well, look, David Ellison gets his way, right? He will acquire National Amusements, which is Sherry Redstone's holding company, and then Paramount will merge with Skydance, which is really a Paramount acquisition of Skydance. Since Paramount's the larger company, but since it's the Skydance team that's taking over, it's sort of seen as a merger. And then he tries to turn around Paramount. It's been a media company that has been in decline for several years now. They had a call with investors this morning with a presentation where David Ellison and his deputy Jeff Shell and kind of some other members of his team explained why they think they can have more luck with it.
Lucas, we explain in the Bloomberg News story about the kind of background, the saga that is, but I think it's worth explaining to our audience who is David Ellison and what is Skydance. They're a big name behind some big things.
Yeah, it's funny that you say that, because there was a portion of the call that started with that, where, you guys know a lot about Paramount. You probably don't know as much about Skydance. David Ellison first got known to people because of his father, Larry Ellison, who is one of the richest people in the world, thanks to Oracle. And Larry's two kids, David and Megan, both got into Hollywood around the same time producing movies. Megan sort of made art house movies. Hollywood loved her at first because she was bankrolling all these big filmmakers, but financially it was sort of a ruinous plan. David went in the opposite direction, where he made these big commercial popcorn movies and has worked with Paramount for more than a decade, because he is a financier and producer on the Mission Impossible movies, on Star Trek movies, on many of the biggest films and franchises at Paramount, and sort of used his success with those early movies to build a larger enterprise, certainly not as big as Paramount, but he makes television shows, he makes animated movies, he has a partnership with the NFL to make sports programming, he's got a nascent video game business, and Skydance is one of the larger independent studios out there.
The team did a really good job going through the minutiae of the deal, because it is complicated. But the bit that I kind of tripped up on was the numbers. So there's a deal value, but it seems like a lot of cash has to be injected into Paramount. And I'm trying to understand why, Lucas. Is it that they just need to kind of have a revamp?
Yeah, I mean, I think part of the pitch that David Ellison and Jerry Cardinale, one of his big investors, made to Sherry Redstone that appealed was, we're going to buy Paramount, we're going to mostly keep it together, we're going to sell some non-strategic assets that you probably would have sold anyways, but we're also going to invest billions of dollars into the business to give it a realistic shot of competing, because Paramount has been held back by the fact that it has a decent amount of debt, at least relative to its earnings, and it just doesn't have as many resources. You know, it's a much smaller company than Disney, or even than a company like Warner Brothers Discovery, and some of that is that, you know, it's sort of the source of all the Redstone's worth, so they only have so much money that they can put into it. So yes, it's a complicated deal, because not only is Ellison and his backers putting money in to buy National Amusements and then the deal to merge with Paramount, but they're investing additional capital, and they're doing some kind of tricky stuff, trying to allow regular shareholders to feel like they're not getting screwed in this deal, because in the initial proposal, a lot of people felt like it was a good deal for Sherry Redstone, but less good for other shareholders, and that's one of the reasons why this has been drawn out.
And to be specific, non-Redstone voting shareholders can get $23 a share or roll their shares into the new company. Non-voting shareholders get $15 a share in cash or one share in the new company. Lucas Shaw breaking it all down so brilliant, as he always does for us. And we're going to get into the nitty-gritty of ultimately why perhaps shareholders aren't buying this deal today, with John Klein, CEO of Hang Media, for more on ultimately, we can talk about the vision and the AI proposition and the technology in a moment, John, but I am interested as to why so much the shares are selling off, and why perhaps these non-voting shareholders don't like it, don't buy it, don't think it'll go through.
Well, there's all this uncertainty still. It's been such a messy deal getting across the finish line, and there's still the chance of another party coming in. They've got a shopping period where, you know, who knows, Barry Diller could jump in, or Edgar Bronfman is said to be interested also. So uncertainty always causes that sort of phenomenon, and they've got to make sure, investors have to make sure that this is actually going to happen.
Okay, so we continue to question whether regulatory it'll go through, and ultimately whether we'll get the deal done, John. But if the deal does get done, what are the positives from your perspective? We go to you with your keen eye on what technology can do for the media industry.
Well, everybody's talking about David Ellison, but let's not forget Jeff Shell, who is a phenomenal operator, is going to come in and get his hands on the moving parts of this business, and he's just first rate. And so, you know, in terms of the blocking and tackling stuff, the operational initiatives and efforts that have to go into it, they've got a fantastic operator there. And then in Ellison, they've got a visionary and enthusiastic owner, which is always a huge plus, because it means that, you know, he'll put effort and money into things. Ellison talked today about re-emphasizing their core competency in storytelling, and he also talked about bringing them up to speed on technology. So those are two worthwhile goals. But when you talk about storytelling today, you've got to be looking at YouTube. YouTube it has changed the definition of what powerful storytelling is, because hundreds of millions of people a week come there and they watch short-form video that they love. And as Lucas was just saying, Ellison has made his name with the the premium blockbuster type titles. And it's going to require a shift in mindset to understand that even if you're in the movie business, you can't ignore the fact that YouTube is watched by far more people than watch anything else anywhere. And so that's going to be a mindset challenge for them.
John.
Not impossible
So John,
to achieve, but that's a challenge.
So what do they do with the $8 billion that they're getting Paramount to emulate that YouTube success?
Well, he talked about technology. And when you talk about technology, you're talking about direct-to-consumer. That is what dominates all media today, whether you're making Hollywood blockbusters, most of which are watched on a small screen in your home. And technology means AI, and it means direct-to-consumer, and those fit together. The AI of it all also impacts the storytelling because you can do more different, less expensive programming using AI now, and that's only going to become even more powerful by next week, let alone next year when this deal finally comes through. So he'll be looking for cost savings. They've already said they're going to shake out $2 billion in synergies, and then they're going to put money behind some sort of content initiatives powered by technology. That would be a smart thing to do. I mean, having run an AI platform that Apple acquired, there's a lot of complexity in AI, but there's a lot of upside with it as well.
Of course, as president of Vinix as well, Vilnix even, we thank you so much for all the AI expertise in tech. John Klein, CEO of Hang Media. We appreciate it. Meanwhile, coming up, we're going to be joined by Seema Shah, Chief Global Strategist at Principal Asset Management. That says chip stocks are trying to pull the market higher, but failing thus far. Ed, what are you watching?
A story out of Germany I spotted Sunday, kind of weekend buried news. The stock's down 6.7% on Delivery Hero. They disclosed that they might face up to a 400 million euro fine from the European Commission over alleged anti-competitive or antitrust practices. Stock had been down as much as 18%, but it's pared some of that decline, and Delivery Hero saying it's going to cooperate with the European Commission. Stay with us. This is Bloomberg Technology.
Stocks kicking off the week back at all-time highs. Benchmarks being led higher by chip stocks in particular. Seema Shah, Chief Strategist at Principal Asset Management, is here to delve into these markets. We're whipsawing a bit on the day, Seema, but in general, Nvidia, Intel, some of the chip stocks playing, well, a key part once again. Is this the ongoing narrative?
It certainly seems to be the case. It's funny because when we came into the year, the expectation that this would look very, very different to 2023, that you'd have a broader set of rallies, not just focus on those big tech companies. And then fast forward 6 months, and actually this year looks so much like 2023, where those mega caps are still carrying the market. I think the one slight difference, and which I think we're going to build on a narrative for the second half of the year, though, is that whereas the mega cap firms are still expected, we expect them to continue to do really well. We are expecting to see that risk appetite and earnings delivery broaden out beyond just those tech companies. So you see some other companies joining in with this positive news.
Seema, hey, it's Ed in San Francisco. So I'm just back from like a classic July 4th long weekend in the US where we sit around the table and people say, hey, have you seen NVIDIA? Like, what's that thing about NVIDIA? And then they bring up interest rates, and then they brought up the election. But I think the fair thing to say is everyone was kind of asking in financial markets, what is the thing right now that's the main driver? Or is it a combination of all three?
Well, so I think, at the moment for equity markets in general, clearly the major driver is still that mega caps. NVIDIA, the Mag 7, they continue to really be those major foundations for the equity market rally. At the same time, you are still seeing some kind of optimism feeding into the market with these expectations for Fed rate cuts, which we would certainly agree with. And then with the US election, that's adding volatility, but we don't think that volatility would be sustained for much beyond the election. So not something that we continue to be worried about.
Seema, go global, because we know you can, and that's why we love you. Look, UK just had elections. France, we're still trying to work it out. US, we have that anxiety. Is US the place to play for equities and indeed for bonds?
Yeah, so look, the election uncertainty that you've seen unfold in Europe has been somewhat damaging. I think when we think about Europe, investors for the first time in years, actually just about 3 months ago, started to get really interested in Europe again. started to see some earnings delivery, some slight cyclical upturn, and had become interested. And then what you see now is that this political turmoil seems to unravel some of that optimism that had been feeding through. So now we're looking back to the US. Now, obviously, the US has its own election volatility on the rise in the last couple of weeks, and certainly we would expect that to continue through to November. But actually, when you look at over another, not just focusing on the next 6 months, we're really taking more of a long-term perspective. That secular bull run that you see for the US, which is really built on these technology companies, we think that will still be sustained. So, of course, there's opportunities elsewhere. It always makes sense to diversify and try and get exposure to other markets. But actually, as a foundational element of a portfolio, we still think that the US is the one that really deserves the overweight.
Seema Shah, Chief Strategist at Principal Asset Management. Good to catch up. Thank you. President Joe Biden says he's determined to remain in the US presidential race, challenging dissenters to end talk of his removal from the ballot. In a letter to lawmakers, the president wrote, quote, "I am firmly committed to staying in this race, to running this race to the end and to beating Donald Trump." It's less than 5 months until the presidential election. Let's discuss where the candidates stand on AI and the future of AI regulation with Narina Singh, CEO of Credo AI, an AI governance platform that streamlines responsible AI adoption by automating AI oversight. Narina also serves on the Biden administration's National AI Advisory Committee. Welcome back to the program. I want to start with a difficult question. We had Vivek Ramaswamy on the program. He is a surrogate for the Trump campaign, and he said, look, when Trump was in office, this wasn't happening. Biden has been through several years of this AI thing. But does Biden have a firm grasp on it, to your mind?
Well, Ed, thank you so much for having me. There's a lot up in the air, especially with the upcoming elections. But one of the core things that we have found in the past, especially 2 years, is the policymakers have actually taken a very proactive stand in understanding artificial intelligence, but also how do you put right guardrails around it so that we can ensure responsible use. And so I would say that what we are seeing, especially our stakeholders in government, have done a great job in at least trying to understand, are they experts? Absolutely not. And this is where we come in as industry to make sure that there's this public-private partnership to ensure understanding of artificial intelligence as well as thoughtful regulations.
And that thoughtful regulation has to be global as well. And I'm interested in, we bring you on also because over in Washington, there's a NATO summit is coming up as if Biden wasn't busy enough already. And I'm interested in your perspective on whether we're seeing a global narrative form, a Western global narrative on governance of AI.
This is a pivotal week in D.C., primarily because NATO is celebrating 75 years of bringing together heads of states and heads of government. And Carolyn, as I always tell, it's, the only constant is change and AI this year. So we are expecting to see not only a thoughtful debate and discussion on what is artificial intelligence role in national security and defense on a global scale, but more importantly, its responsible use. It's been fascinating to see NATO since 2021 actually having something called as principles of responsible use. They've engaged with the industry, including Credo AI, which is an AI governance and risk management and compliance platform that helps organizations deliver on the goals of responsible AI. So what we are going to see coming out of the NATO summit is not only going to be, our belief is not only going to be a firm attention to artificial intelligence, but also more international cooperation on standards and evaluations.
I find this fascinating. NATO is a coalition of 32 member states, 2 North American, 30 European. And within that, the United States is probably the market leader in developing large language models, generative AI, strong players in France, the United Kingdom. How do they agree on anything when it comes to a set of rules, given the cross-jurisdictional assembly of that group?
Ed, this work has been in motion for years. It is not a question and discussion happening right now. So especially for the past 4.5 years, and I've been on the National AI Advisory Commission now for almost 2 years, there's been a very strong international cooperation on what is good artificial intelligence governance and standards across artificial intelligence look like. And just as a case in point, in August, Europe's first Artificial Intelligence Act goes into effect. And as you can imagine, that is really focused extensively on AI risks, but also rights of citizens. So we are already seeing across the NATO allies a lot of discussion, but also collaboration and understanding on how paramount it is to focus on artificial intelligence risks, but making sure it actually serves the citizens of all these nations. And there's already been a lot of consensus, I believe, in coming up with the right frameworks to put guardrails.
Navrina, whenever I post anything on guardrails, on protection, on governance of artificial intelligence, on LinkedIn or wherever else I'm throwing my ideas, I get so much vitriol and fight back saying you can't even use a word like guardrail when it comes to artificial intelligence. I'm sure you get that too. What's your response when people are cynical on it?
I think cynics is what drives innovation forward, is what I would say, Carolyn. One of the big narrative shifts that we've seen in the past few years, and especially, Credo AI created the word AI governance. And the shift that we've seen is governance is actually not a barrier to AI innovation. Now it's becoming a critical component of making sure AI actually works for the businesses that are investing in it. If you just look at the past earning calls from most of the organizations, whether it's Meta, Microsoft, Adobe, and others, there's been a massive focus on investment in artificial intelligence. But as of last week, the financial reportings now also include AI risks and making sure there are right governance structures, not only at the business level, but at the AI systems level. So the narrative, I would say, has shifted, and also the investments is shifting from just AI adoption to now making sure responsible AI adoption is paramount to business success.
Navrina, always great to have you in the building. Thank you so much, Navrina Singh, Credo AI CEO, busy on all things AI. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. Caroline, what do you see in the markets right now?
A little bit of volatility. To be expected. We get a big CPI print this week. We get Jay Powell, of course, giving testimony for 2 straight days. We're up 0.2%. We're actually at record highs once again. We tried to flip into the red, but the NASDAQ 100 back on top once again. Chip makers help there. I'm looking at CAC 40, though, more affected by politics at this very moment. We're off by about 0.5% at the moment. So clearly worries about really what France is able to achieve, and we're going to dig into that in a moment, Ed, but it's affecting stocks a little bit. Bitcoin off by 1.5%. This is more about a supply side issue. We're also hitting some technical levels where we see us trade lower into the second half of the year. Remember, it's been a phenomenal performer for the first half. Let's move on and look at the individual companies that I've got an eye on. Stocks, chip stocks, benchmarks rising higher. Look, Nvidia doing very well. Once again, up top, leading us higher from a points perspective. We're also seeing Intel do incredibly well. Some of these companies that many feel have been left out of the AI trade actually saying start to play in there and get ahead of any sort of short squeeze. Super Microcomputer, one of those, up more than 8% on the day. This is about a server perspective and an AI glow. But Meta, on the downside, more than a percentage point off. Now, it rallied hard on Friday. Maybe we've got some profit taking happening as we get Wedbush and some other key names saying, look, upgrade your price targets here. But we are also seeing Bernstein putting out a thoughtful note saying, look, maybe we've got Meta not performing well if Trump came to power. Let's dwell a bit more on geopolitics and political landscape now, Ed.
Yeah, let's head over to France, which is heading into an extended period of political gridlock after a shock defeat for Marine Le Pen's far right in Sunday's election. A left-wing alliance will be the biggest group, but the divided parliament has no clear majority. Here to discuss, Bloomberg's Oliver Crook in Paris. There is an AI startup ecosystem conversation to be had here, Oliver, but let's start with the basics. Where do we stand in what will be, I guess, protracted coalition building and political bargaining over the coming weeks?
Yeah, that's right, Ed. And protracted political bargaining and coalition building in a sort of nation that is not really accustomed to that sort of thing, right? This is really a presidential system where generally you have some kind of majority within the parliament. The president appoints the prime minister, and you sort of move along. It's quite unprecedented, in fact, for the president, as Macron did, to dissolve the parliament and call these sort of snap elections. And though the sort of great fear for the mainstream of politics within France was that the far right was going to sweep, that is not at all the story that we have today. But it is not any any simpler as a result. You now have this left coalition that is composed of people with very different views on the political spectrum. The very far left, Jean-Luc Mélenchon, is among them, and none of them have an outright majority. So there's going to be a lot of discussions. The Prime Minister tendered his resignation today. Macron refused to accept it. He said, you need to hang on. So he's going to be there for at least another couple of weeks. There are just not the votes right now. There's not any clear path to how this government gets formed.
Oliver, what then is corporate France's reaction? Because interestingly, there's a lot of very big international businesses within the CAC 40, but what has been the domestic viewpoint?
Yeah, so listen, there's going to be, this is not even close to the sort of worst case scenario for business and for markets for what's come out here. This gridlock situation, though it's not sort of ideal, falls short of some of the sort of other issues that you would have had. There is also, though, a great consciousness within France and across Europe, particularly when you have the far right rising as it is, about the question of immigration, and particularly in France and in my home country where I live, Germany, this question of where is the labor? There is just not the labor in the market to build a lot of the businesses that people need to be building, and a lot of the policymakers in the mainstream politics see the answer there as immigration. Though the far right did not sweep the elections, let us not fail to mention that they're the number one party right now in French Parliament. They have set a record. So in terms of actually creating a stable environment for business, this is not an ideal outcome, though it falls somewhat short of the worst case scenario.
Let's take that and focus at a micro level on the tech sector then. You know, this immigration center point is not unique to France, but there is a debate around talent, Oliver, and being able to bring talent into a market where, you know, France sees itself as an AI leader, for example. What do the startup level conversations tell you about the outcome of this election?
Absolutely. I mean, it wants to be a nimble economy, and that's sort of what Macron sort of promised when he came into power, to try to make this economy a little bit less stale, a little bit more dynamic. I mean, it's home to Mistral, which is a sort of one of the great AI hubs here within Europe, you know, where there are not a great many of these sort of tech leaders to choose from. And this is coming at a moment, Ed, where Europe is really, you know, in a slow burning kind of existential crisis in terms of its own competitiveness. I mean, they worry at the French level, but they're really worried at the EU level. How do you boost French competitiveness and European competitiveness at a time when you really see global blocs fragmenting, with the United States Inflation Reduction Act, its CHIPS Act, China that is doing a lot of sort of helping of its own businesses with its own domestic economic policy? Where does that leave Europe? One of the solutions that Macron puts forward and the mainstream of Europe is a more robust European market, a capital markets union, banking union, to try to get that capital flowing across borders. When you have Macron basically just you know, his power taken out from under him at the EU level, it makes it much harder to move forward with that, particularly when you have the far right and the far left, neither of whom are really big fans of a bigger and stronger Europe.
Oliver Crook, we really appreciate you staying late there in Paris for us on what has been a long weekend of coverage. Thank you very much indeed. And look, it's not the only political story. We've got to get to the UK and discuss the recent elections there as new Prime Minister Keir Starmer focuses on economic growth. What role does technology play in all of that? Pleased to welcome Julian David, CEO of Tech UK, for more on this. So Julian, what does the investments landscape look like for technology now from a government perspective?
Well, it's really interesting. I mean, the tech sector in the UK is a success story already. It's already grown 25% over the last 10 years, and investment is coming in, and we're now 150 billion pounds GBA to the whole economy. So the starting point is in a great place, Caroline. What was interesting today, I was at Rachel Reeves, the new Chancellor, first female Chancellor, by the way, historic moment, giving a speech about what is the plan for growth, how they're going to go about it. And it was very much about changing planning. It was about investment. It was about reform.
Julian, the conversations I've had with the tech industry over the weekend, and good morning to you from San Francisco, is that they're big on hope in the UK based on a Keir Starmer government with Rachel Reeves at the Treasury, but thin on detail. You know, I went back and read the Labour manifesto, and they write about AI, right, fostering a competitive AI industry. But one complaint is that actually they don't explain how they're going to do that, particularly when it comes to getting data centers built, talent on the ground.
Yeah, so really interesting, because this morning, as an illustration of the new powers to do with planning, because the Deputy Prime Minister was there as well, Angela Rayner. And Rachel Reeves said the first two decisions that she's calling in under her new powers as Deputy Prime Minister to review are two planning permissions for data centres that were turned down under the previous government. So that's quite an indicator, I think, of them treating the tech sector importantly. But there's more to do. And we want them to now start to publish how are they going to use AI. There's some good indicators, Ed. I mean, there's quite a bit set out about the way they're going to try and use AI to reform health provision. There's some talk about more use of AI across education and skills, and continuing to look at how we bring in more tech investment. And that's another meeting that's happening tomorrow morning. They're coming thick and fast at the moment, these engagements with the new government, and a lot of it is about tech.
It's notable, it should be about tech, because despite so-called turmoil, worry about Brexit, we still have a notable amount of unicorns in the United Kingdom, with Revolut maybe eyeing an IPO, for example. But the key question for me has to be talent, Julian, and whether or not it is going to get any easier to get talent from abroad into the UK if that is necessary for the ecosystem.
Well, we need world-class talent from around the place. That's how tech thrives. And we're well placed to get that. But we also need to grow our own talent, Caroline. And the other thing that was interesting today was a much more flexible approach to the apprenticeship levy, which business has been complaining about for many years now, to actually say, OK, how do we get more flexible use of skills? How do we get lifelong skills? How do we get returners and retrainers? How do we open up our industry? It's something we and our 1,100 members at Tech UK are very passionate about. I think we're in good shape for this. I mean, yes, the arguments about migration, I heard you talking in respect to the French elections, but we ended up with a centrist government, and I think a sensible approach to this is going to be one that says, get the skills we need that are globally available and grow our own and keep doing that.
Julian, the City of London is fascinating to me. You have a basically emboldened Labour mayor in partnership with now a Labour government who's talked about devolving more power to the mayor's office. Do you think that brightens the prospects for that city?
Yes, I do. And I also think that, you know, how to say this, a lot of talk was about growing other parts of the UK.
It was, formally.
Yeah, seemingly not talking about continue to grow London, as if London could look after itself. And I think that will change now. That does seem to be the case. So we're certainly thinking that the view of London, I mean, Elon Musk was recently talking about the fact that apart from the Bay Area, London is the next biggest centre for AI talent already. So those kind of things are working for us. If you put that together with an active industrial strategy, a real focus on skills, and there's an investment conference, as I said, where we're actually saying, how do we get some of the people who want to invest around the world? Come and look at the UK. It's stable. It's very tech friendly. It's got lots of talent, and it's got some really great industries like the city.
Julian David, CEO of Tech UK, fresh reaction to a busy weekend of government forming. Thank you. Right, a story we've been watching overnight turning to Samsung. Thousands of workers have walked off the job today, staging a rally to demand better pay. It's the biggest organised labour action in the South Korean company's half-century history. Negotiations over pay and vacation time collapsed last month. According to union leaders, the strike aims to drive home their demands by disrupting production at one of the company's most advanced chip facilities. Caro.
Fascinating labour story. Meanwhile, coming up, we're going to be joined by the CEO of an AI agent startup, Heavier, on the company's latest funding round. That's next. AI agents. This is Bloomberg Technology. Heavier. It's an LLM platform which handles really complex multi-step questions. Well, it's raised $130 million in a Series B led by Andreessen and Horowitz. Here to discuss how the company will use those funds, Heavier founder, CEO, George Savelka. George, it's great to have you here. New York-based company. You're looking to raise funds to what? How do you build up what it is that you're currently building?
Thanks so much for having me. A really important thing to understand about what Heavier does and who we are is something broader about the larger AI landscape. We fundamentally think that there's a problem in AI right now. And you have thousands of companies going out and building chatbots or search engines or things that are really great at one-off tasks. But at the end of the day, the way that we work is much more complex. And Hebbia is building and has really built an AI analyst, which is amazing at doing a variety of complex tasks. It understands the way we work, breaks it down into single steps, and then can execute complex work end to end.
So your problem is that, look, we're all getting hyped about AI and AI agents, but very few of them are able to do very much complex at all.
I think that's true. Last year was this year of experimentation. But this year, people are really trying to get serious value and quantifiable value out of these AI systems. And it's quite hard to find unless you have things that can do more complex work. A chatbot can rewrite an email or help your kids cheat on their homework. But at the end of the day, what we have to do is we have to go and create AI agents that can do complexity, that can tackle the interesting parts of what we do. Yeah.
George, I've been reading a lot about what you've built. When I think about my own sort of day-to-day workflow, if I'm using Slack or Google Drive, I'm interacting with files in multiple mediums, right? Text in documents, but also video, audio. And often I want to find things across all of them. How difficult was that to build something that can work across multiple mediums and search across them commonly?
You're seeing a trend in AI right now where a lot of the things that people are building, a lot of the research that people are undergoing is all around embracing multimodality. And Hebbia is model agnostic. It's hard for any firm to actually go out and say, I'm going to make a serious bet on one model or another model. And part of the benefit that Hebbia provides is that the minute that multimodal models are released or the minute that anything new happens in AI, you can leverage it immediately in a very easily understandable way. And when multimodal models came out, Hebbia was one of the first places where leading financial firms, asset managers, and Fortune 100 companies actually ended up using those models in production for live, quantifiable use cases that drove value.
George, Bloomberg's reported that this deal values at around $700 million. Tell me about how quickly you've scaled the business side of the company, your sales, your operations, and how big a challenge that's been.
One of the really exciting things about Hebbia is just how fast we've grown. We now work with over a third of the top 50 largest asset managers by AUM. And we're really planning on kind of continuing to grow out and use this funding to become the de facto leader in generative AI for financial services, while also going out to a variety of different verticals, like the legal vertical, where we have a variety of new customers, and those really large Fortune 500 companies that I've previously mentioned. At the end of the day, we're coming off of 18 months where we grew 15x in our revenue. Our headcount quintupled over the last year. And I don't think it could be a more exciting time to be building an AI company right here in New York.
George Savolka, founder and CEO of Hebbia, thank you for your time here on Bloomberg Technology. Appreciate it.
As Apple approaches the decade anniversary of the debut of the original Apple Watch, the company is preparing major updates to its smartwatch line for later this year. Apple's working on an Apple Watch Series 10, an Apple Watch Ultra 3, as well as a third generation version of the Apple Watch SE. The biggest changes to the Apple Watch line this year will be coming to the Series 10. For the first time in several years, Apple's planning to make the Apple Watch quite a bit thinner. It's also planning to increase the screen size on the series models for the first time since the Series 7 launched in 2021. The new Series 10 high-end version will come with a display that approaches the screen size of the Apple Watch Ultra. It's also planning an update to the Ultra, but that will retain the same design that launched in 2022. Both the Series 10 and the Ultra 3 will get a new processor. That will be a big focus of the company's introduction. There's also going to be a new lower-end Apple Watch SE. The company has considered moving to a plastic casing for that device in order to bring down the cost and better compete with lower-end smartwatches from Samsung and other providers. I'm Mark Gurman. This is Power On.
Let's just talk about a corporate story now that Microsoft is ordering its China-based employees to swap their Androids for iPhones. Now, in an internal memo obtained by Bloomberg, workers will be required to use only Apple devices to verify their identities on work computers, or their phones, in fact, starting all in September. Now, the move is set to impact hundreds of workers across mainland China and is meant to ensure staff use the Microsoft Authenticator when logging in. A cyber focus. Meanwhile, let's turn our attention to Bitcoin, down slightly today as concerns grow about a possible sale of the tokens by creditors of the failed Mt. Gox exchange all the way back years ago. It's fueling, though, these concerns that maybe this crypto bull run that started last year is waning yet further. Bloomberg's Sonali Basak has been across all of the moves. We're down another 2%, but we're down 5% lower. And it feels as though it's a supply side issue rather than anything else.
That is largely what the problem is. You have, remember, the Mt. Gox overhand. This is about $8 billion worth of Bitcoin here, a sizable chunk that is really being repaid to creditors here about a decade after the Mt. Gox bankruptcy. But think about how much pressure this has recently put off the market after the initial exuberance of those Bitcoin spot ETFs in the United States started. You now have Bitcoin plunging below that $56,000 level. And remember, that is almost 24% off the high that we saw just a little earlier this year. So when you have the supply overhang compounded by, let's say, the lack of excitement around the asset class right now, you do have a tough summer here for the cryptocurrency, particularly when you think about other catalysts that should have been more exciting. Think, for example, an Ethereum spot ETF. Tough to have an overhang like this for this market right now.
I was reading the Bloomberg story, and it's Monday, but it says in the story, if this decline carries through Sunday, of like 7 days from now, it'll be 5 straight weeks of declines. Who starts a week by saying that? But we're trading at our lowest level since February. What other data are we looking at? ETF outflows, where?
It's interesting that you asked that, because one thing that I have, for example, is many people who invest in Bitcoin have alerts. They wake up in the morning and, oh my God, Bitcoin's down another 6%. Now, most people are used to volatility in this asset class, but to your point here, it's been weeks now where we haven't really seen a strong bid in the market and some significant forces when it comes to selling also. And what is a harder struggle to find is what that next catalyst is. What is that next market moment for Bitcoin? When are people going to get energized about where this goes next? There weren't those stories at the beginning of the year, like the halvening, like the spot Bitcoin ETF that exists for this cryptocurrency now. If you talk to most people in the crypto market, they take a macro view. This idea that U.S. fiscal spending, for example, will be a bigger catalyst for Bitcoin. But what does that draw interest in the near term into the asset?
Bloomberg's Sonali Basak. Great to have you on the show. Thank you so much. So that does it for this edition of Bloomberg Technology. Just a quick programming note, Caroline. There is no Bloomberg Technology for the next couple of days. Bloomberg Open Interest will be carrying Fed Chair Jerome Powell's testimony to the Senate Banking Committee. But BTech is back on Thursday. You will be in New York and I will be in San Francisco. And from those cities, this is Bloomberg Technology.